What if I told you the easy money is over? That the passive buy and hold strategy that worked for the last decade is now a trap? The next 2 years will fundamentally rewrite the investment playbook, and the 2026 global outlooks from major banks and asset managers show 3 massive shocks are coming that most investors will miss. The world economy isn't crashing in 2026, it's resilient, but it's also deeply fragmented. The United States is stuck fighting stubborn inflation, keeping rates higher for longer. Meanwhile, Europe has more room to cut rates to boost its economy. This massive divergence means that where you invest matters more than ever, and this divergence creates the first massive opportunity, or trap, for 2026. The AI revolution is bigger than you think. It's not just about chip stocks anymore. It's a full-blown capital expenditure supercycle so powerful, it's now a dominant contributor to US GDP growth, outpacing consumer spending. Big tech is forecast to triple its spending to $500 billion by 2026. The real story is that this is creating a new security supercycle in the infrastructure that powers it all, modernizing power grids, building data centers, and securing critical resources like copper and even water for cooling. But this fire hose of AI spending is creating a dangerous concentration in one market, which brings us to shock number 2. The strategy of just buying US stocks is dangerously outdated. US markets have extreme concentration risk, dominated by a handful of mega-cap tech stocks with stretched valuations. Smart money is diversifying. They're looking at Europe for its attractive prices and a push for strategic autonomy, fueled by Germany's fiscal reset. They're targeting Japan for its orderly reflation and improving corporate governance, and they are especially focused on India, which is poised for explosive growth as companies build out China Plus One supply chains. But the smartest investors know the biggest shifts aren't just where you invest, but what you invest in. That's the final shock. And the final shock might be the biggest. The most powerful investments in 2026 aren't just in public markets. So-called alternatives are now foundational because they are the primary vehicle for investing in the biggest structural shifts in our economy. We're talking about private credit, which is thriving as banks face regulatory constraints, and infrastructure, the direct beneficiary of the AI boom and the green energy transition. This is where you access powerful secular trends, along with savvy plays in private equity secondaries. So, to recap, the AI boom is a massive infrastructure play, US market concentration demands global diversification, and alternatives are now essential for accessing the biggest long-term trends. The investment game is changing fast. If you want to stay ahead of these shifts, like this video, share it with a friend, and subscribe for more insights to navigate the markets of tomorrow.